Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to set some early goals in your trading if you're just getting started. I know a lot of you that are watching these videos are really just getting started, and most of the stuff that I do addresses more experienced traders that are five-figure account size, and they're just not having the success that they have. And you guys are out there struggling to try to just get started. So let me try to give you some advice on that from my perspective. You may not see it that way, but that's okay. It's a beautiful, very early fall day of late September of 2023, so I thought I'd come out and do as many of these videos outside as I can, because pretty soon in New England here will be a couple of feet of snow. So that's why we're outside today. When you're starting out, and let's forget all the mechanics and all the rules and Bollinger Bands and all that other crap. Let's just talk about trading itself. When you're getting started, you're not doing yourself a favor, first of all, by trading in a demo account and doing back testing. If you don't know how to trade, then back testing is going to help you. It really isn't. You're going to waste your time. And I've done other videos about stuff like that. Let's just make it simple. And if you're going to trade and you want to learn how to trade, you learn the mechanics and the plumbing of the trading. You use your demo account to learn how to operate your trading platform, how to get in and out of a trade, and all the other stuff during trend lines and stuff. But once you have used that demo account simply to get used to placing orders and getting out of orders and not trying to make any money, you open a live account, and you do that with $1,000. In the U.S., we have a 5% of the cash value of the currency pair that we have to deposit as margin. If you're not doing that and you're trying to trade on $100 and go 200 to 1, don't listen anymore to my channel, because my advice won't make any sense to you, and you'll think it's slow and pedestrian. In the U.S., as I said, there's a 5% margin requirement, which right now on the major pairs, and you should be trading major pairs and not crosses or exotics, because they just have too much volatility and the spreads are too big, and you just don't know what's going to happen with that stuff. You want to learn the same way you learn how to drive a car, right? The 5% right now is $650 for a mini account, and about $6,500, $6,300 margin on a full one lot position. So if you have a $6,300 margin requirement, what are you going to do? Trade on $6,400, $6,800? You have to look at $10 a pip that you're trading at. If you lose 6 times in a row, 10 pips, you've lost $600. So I mean, you got to be reasonable off this stuff. Give yourself in the beginning the fact that you're going to lose a lot. And in fact, what I tell my students in working on a single mini lot is, I want you to lose a lot, because now's the time to learn what not to do when it's not costing you more than a pizza. Because once you get up to the point where you're trading, I've got a position on now, it's $150 a pip. I do 4 pips and I'm $600. So if you start out right, then when you get to the point where you're trading money that's significant, you're not gonna be afraid. You're going to be able to manage those positions correctly and taking the proper risk in relationship to your skill level and what the market is offering to you at any given time. The fact that the market is offering you a position trade doesn't necessarily mean that it's going to take you 20 pips. It might only be a 2-pip trade or a 3-pip trade. So if you know how to trade, you'll be okay. You'll be okay taking those 3 pips, because 3 pips 1,000 is 0.3%. So look, if you're trading one full lot and you're making 0.3% a day, you know, you're gonna do okay. You just have to have patience so that you don't take a 40 pip risk or an 80 pip risk. So start with a mini account and build your trading to the point where you're consistently making money. That doesn't mean you make money every day. It means that you're, I don't know, if you could be a jump ball 50-50 trader, you lose 5 times and you win 5 times, but you make a little bit of money, it means that your average position value is better than your losing amount, and so you're going to be okay. Are you going to be successful as a 50-50 trader? No, you're not. But it gives you an idea of where you need to work on, and the characteristic that you need to work on is not, oh, I've got to bring my profit targets down, or I got to reduce my risk, or no. You got to learn the entry analysis. How do you judge that opening trade? So let's say you're able to do that and you get going and you're comfortable trading that mini lot. Now you go to $10,000 and you trade one full lot. Again, you've got $6,300 of margin there. So the $10,000 gives you $4,000 of $3,500 of runway. That's 350 pips. Are you going to lose 350 pips? Well, no. Well, do you need $10,000? No. Could you trade on 7,000? Yeah, probably. But if you lose that and you run that to the point where you don't have enough margin to trade a full lot, how's that going to make you feel? It's not going to give you the feeling of success that you need. So I'm just telling you what you should be thinking at and thinking of doing. You trade that mini account until you become consistent, so there's no fear of losing 350 pips, okay? You may lose 350 pips when you're learning, but don't you think that after you lose 100 or 200 pips in 10 pip increments that you pretty well figure out what you're doing wrong? Of course you would. Now, can you do that on your own? Probably not. But, you know, when you're starting out learning how to trade and coming up with $1,000 or $10,000 is a lot of money, you're not going to want to pay somebody like me the thousands and thousands and thousands of dollars for education that we're going to have to charge. And if you're only trying to pay your light bill or whatever, paying that kind of money doesn't make any sense. You know, I'm trying to work with the people that are trying to make $70,000, $80,000, $100,000 a year off their trading, replace their job income. If you're making $300,000 a year, can you replace your job income? Well, certainly. You know, there's plenty of people out there that are making that kind of money. They may not be broadcasting it out on the internet like some of these guys. Most of the guys that are broadcasting this stuff out are trading 100 to 200 to 1. And they can say, oh, I made $12,000 today. At 200 to 1, you do the math and see what's going on here. But also included in that is what happens when you lose. You lose the account. So if you have a lot of money and you lose the account, you can replace the account. If you're just coming up in life and you're trying to trade and that $10,000 or $8,000 is the last that you have, and you're trading at 100 or 200 to 1, 3 hops and you're out, you're done. You've lost all your money. Not just the money to margin, but you've lost it all. So you can believe what you're seeing out there or try to look logically at things. You could live your life in hope, or you can learn some skill. Now, I'm trying to show you how to build that skill. Start with a mini account, go to a full lot trading position, and let's see about just paying your light bill for the year. That's your goal. That's the thing that you want to work for, is if you could pay your light bill. If you can't make, and what's your light bill going to be? Let's say you're in the more hotter areas where we don't have the snow, or you could do electric heat too, and you'd probably run you a couple $100 a month, right? Let's say it costs you $2,000 a year to pay your electric bill. Can you do that on a $10,000 account? Well, if you can't, then you shouldn't be trading any bigger than that. You should probably give up your trading. Trading, as a nature of its risk of ruin, is obviously higher than real estate, although if you don't know what you're doing in real estate, you could lose more than what you're worth very quickly. I was in real estate for 40 years. I know what I'm talking about. And if you get it wrong, you can lose a lot of money. But your risk is more than if you were to put your money in an index fund or T-bills or something like that. The more risk that you're taking on and the higher goal that you're looking at for making money is going to mean that your rate of return for participating in that market needs to be high. And so that's why if you have a $10,000 account and you're trying to make $2,000 a year out of that, you're trying to make 20% on that account. In real estate, if you know what you're doing, 20% is a layup. It just takes time to make that count up. And that's why currencies are riskier, and because it's not going to take you 4 years or 8 years to make significant money in your trading. If you know what you're doing, 20% is nothing. You should be able to do 40, 60, 80% in your trading if you're skilled. But you can't start out saying, oh, I'm going to take this $10,000 account and I'm going to double that, or I'm going to go 80%, I'm going to make $8,000 on it, because it's not going to happen. Maybe later, maybe when you learn the skills. How long does that take? It could take you 6 months. If you're working with somebody, it could take you 3 months to learn those skills. Once you learn the skills, it's just a matter of you building your rules that are consistent with your personality and your ability level. I mean, if you're listening to some guy that's building mechanical rules that are based on some algorithm, and you're not very well steeped in math, you're not going to understand it. And certainly just to take their system and try to duplicate that isn't going to work for you. So you have to work within the parameters of who you are and what you're capable of doing, not only your bank size and the pair that you're trading, but also what your educational awareness and skills are, to be able to bring those skills to bear to the currency market. You can be a carpenter and come into the currency market and replace your job income. But there are skills that I teach that you bring from your carpentry into it, where you might not have a math background, you might have a science background, you might not understand order flow. So you bring the skills that you have in, and I can show you how to manipulate those skills. But when you set out in your trading, if you've done what you should do in your mini account, you should not get out of that mini account until you're consistently making what would average out to be a 20% return on that $1,000, $200 for the year, or let's just say 200 trades. You could do 200 trades in a week if you're scalping. It all becomes a numbers game, guys. It's all about the numbers. It's all about statistics and probability. And that works so well in the currency market because it's such an enormous market. It's almost $7 trillion a day. I think it's $6.7 trillion a day, 2023. That's bigger than the stock markets combined on a daily basis. So you have this enormous cruise ship going down the ocean, and you see an iceberg way up ahead, and the cruise ship starts turning the wheel. It's going to take them 6 football fields before you even see the ship begin to turn. So we can use that to our benefit, such that our probabilistic analysis can come into play. If you don't have the mathematical background for that, that's fine, because I can show you, and I imagine there's other folks out there that can show you how to do probabilistic analysis without the math. So let's try to pay that light bill. That's a reasonable target for you to do. And if you can't do that based on reasonable rules, reasonable leverage, trading reasonable pairs, then you shouldn't be continuing on with the currency trading. You know, do something else. Put your money in a Vanguard index fund at a 0.5% load and let that compound at an average of 6 to 8% a year. Takes you 10 years to double your money at 7%. So, and you could do that in currencies in a year. I had last year, 2022, I was up, I think 93% against my risk in about 8 months. So, did I end up 80% ahead? No, I was up 46% at the end of the year because I'm trading for a different purpose. I'm not trying to trade to pay my light bill. I'm not trying to replace my job income because I don't have a job. I'm retired. I'm comfortable. I retired a millionaire from my real estate. I'm trading to make $1 million. And in order to do that, I can't do that on a $5,000 account. So I'm trading six-figure account. And when the time comes to push it to the center of the table, it all goes to the center of the table. So sometimes you get it right, sometimes you get it wrong. Now, in following my rules, slowly and gradually, trading with a larger size account, you make large amounts of money. And you can compound those. I'm 74 years old. How many years do I do I have to compound out? So I tend to push it a lot more aggressively. So for the folks that want to train with me, I start them out to do the consistent long-term view of the thing. And I'm sorry, if you're 50 years old, that's what you got to learn how to do until you learn the techniques of when to push it to the center of the table and when not to do that. And you have to be willing to say, well, if I push it to the center of the table and I lose it, is that going to change my lifestyle or the projected lifestyle that I want to have over the next 10 years of my life or 20 years of my life, whatever it is, because I'm older and I'm not going to be trading currencies when I'm 92. When you are learning this stuff, be sure that you're learning how to trade and not learning someone else's system to trade, because that isn't going to help you. Replace your light bill. Once you learn how to replace your light bill, then you start to learn how to step up. Go from a $10,000 account to the next increment of lot size. Don't trade a lot and a quarter or a lot and a half. Don't do that kind of compounding horseshit, because it's not easy. It's not simple. It makes it complex. There are other things that you want to apply your attention to. And if you're in such a hurry to make a lot of money, why don't you go to Vegas, throw craps? It's only 1.31% or something like that against you on the pass line, and try to do that. And you can double your money in an hour if you get it right. And of course, you could go to the wood very easily as well. I've thrown dice. I've played poker. I've traded stocks. I traded options for 4 years. I did real estate for 40, and now I'm doing currencies. So I think currencies is the best way for you to do it. But if you find that you can't do it, better give it up, because it's a good way to lose all your money real fast if you don't get it right. Learn how to pay your light bill, be happy with that, and then gradually figure out what are the rules. How do you change your rules so that you can go to that 40% or 80% return against your risk on a yearly basis? And if you get really good, go to 100 to 1, because you'll understand then how to manage that. Look, I've been looking at the currency market since 2007. And I'm pretty experienced, and I could go to 100 to 1, I could go to 200 to 1 and probably be fine. But the risk is too great. If you look at some of the folks that are doing that, they're not trading six-figure accounts. They're trading smaller accounts, $30,000, $40,000 account sizes, because they know that at a certain point they're going to wipe that account out. And they don't want to have more money on the table to lose. So they lose the 40,000, they refund the account with 30,000, and they go forward with there. And they lose the 30,000, they come back in, they load another 30,000, and they make 140,000 off that 30, or 230,000 off that 30. That pays up for a lot of going broke. But if you don't have the skill to do that, don't even consider it. Have fun with your trading. Start with a mini account. Start buying yourself a pizza out of the proceeds. Don't compound it. You take that money out and buy yourself a pizza, and then transfer up into the $10,000 account. Trade one full lot, and try to pay your light bill for the year. And after 4 or 5 months, if you're consistently moving in that direction, at making a couple of $100 a month on that trading that full lot, that's 20 pips a month. Try for more. Add more money to the account. It's all about being consistent in not only your trading, but your approach to trading. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.